Thanks for tuning in to your daily dose of quick real estate updates, local housing trends, and market data, plus tips, tools, and strategies to help you buy, rent, or invest with confidence. You're now getting ready with RealiCare Reports, powered by the innovation team, Cami and Rex. Now go grab your favorite morning beverage, whether that's coffee or tea, and let's enjoy this episode.
Welcome to the Deep Dive. Today, we're getting into the West Melbourne real estate scene.
Yeah, looking at the trends from, 2018 through to now 2025.
Exactly. We're using the Key Insights report for West Melbourne covering that period.
Yeah.
And the idea is really to pull out what matters if you're, maybe thinking of buying, selling, or you're just keeping an eye on the market there.
Makes sense. Lots of changes to unpack.
So, kicking things off.
Yeah.
What's the big picture on prices over these years?
Well, the headline is definitely growth. Significant growth, actually.
Okay.
If you look back at 2018, the average home sold for about $275,000.
$275K. And now, year-to-date, 2025.
We're looking at an average of $391,000. So, quite a jump.
That's, let me see, roughly 42% higher over 7 years?
Yeah.
Pretty substantial.
It is. But it wasn't just a straight lineup.
No. When was the real peak then?
That was definitely 2022. Average prices hit $458,000 then.
Wow, 458K. What was driving that, do you think? The pandemic effect?
Almost certainly. You had low interest rates, people wanting more space, maybe moving around more because of remote work. A lot happening.
Right. And since then, things have cooled a bit.
A bit, yeah. Prices have softened from that absolute peak, but importantly, they're still way, way higher than where they were before the pandemic surge.
Okay. So the gains haven't just evaporated.
Not at all. And another interesting angle is the price per square foot.
Ah, right. Not just the overall price tag, but what you're paying for the actual space.
Exactly. Back in 2018, it was about $135 per square foot.
$135.
Okay. Now, even with the recent adjustments, we're seeing figures between, say, $213 and $225 per square foot.
So hold on, that's more than a 55% increase compared to 2018 levels.
That's right. So even if the average sale price dipped slightly from the 22 peak, the fundamental value per square foot has held up really strongly.
That suggests a real lasting shift in how the area is valued.
I think so. It's not just temporary froth.
Okay, so prices are up. Value per square foot is up significantly. What about market activity? Like, how many sales are actually happening?
Well, that's where we see a bit of a different story lately. The highest volume of sales, dollar-wise, was actually in 2020.
2020. Interesting. Not 21 or 22.
No, $176 million closed in 2020. The frenzy might have peaked later, but the total money changing hands was highest then.
Okay. And now? 2025.
It's much quieter on that front. Year to date, we're only at $11.3 million.
Just $11.3 million so far.
Yeah, and if you project that out for the full year, maybe around $33.9 million, a big drop from that $176 million peak.
So fewer houses changing hands overall right now. Listings are selling, but maybe just not as many transactions happening.
Precisely. The pace has definitely slowed down compared to those really hot years of 21 and 22.
Which I guess leads us straight into days on market, right? How long things are taking to sell.
Absolutely. And that really reflects the shift. During that peak frenzy, 2021, 2022,
Yeah.
the median time a house sat on the market was just 8 days.
8 days. Well, that's incredibly fast. Blink and you miss it.
It really was. Now contrast that with 2024 and so far in 2025.
What are we seeing now?
The median is more like 33 to 54 days. And the average days on market for 2025 year to date is 79 days.
79 days average. Okay, that's a huge difference from 8. Buyers have much more time.
Definitely more time to look, think, maybe negotiate, less pressure.
And does that show up in the final sale prices compared to the asking prices, that sold to list ratio?
It does, yeah. Back in 21-22, it wasn't uncommon to see homes selling for 100% or even more than the list price. Bidding wars were common.
Right, that classic seller's market indicator.
Exactly. But now in 2024 and into 2025, that ratio is hovering around 96 to 97%.
Okay, so sellers are generally getting slightly less than their initial asking price, more negotiation room.
That's the takeaway. Buyers have a bit more leverage. Sellers might need to be a bit more flexible on price or terms.
So if we kind of summarize the journey here.
Yeah.
We had a stable market pre-pandemic.
Right. 2018, 2019, healthy growth.
Then 2020 hits, the pandemic surge starts, pushing up demand and prices.
Yep. Then 21 and 22 were the absolute peak sellers market. Super fast sales, often over asking.
Followed by 2023, where things started to maybe cool down or normalize a bit.
Yeah, cooling phase, but importantly, value stayed pretty high. Didn't crash.
And now, 24 into 25 feels like more of a stabilization period.
I think stabilization is a good word. Slower pace, longer market times, more buyer leverage, but prices are generally holding firm well above those pre-pandemic levels.
Okay, so given this current stabilization phase, what does that mean for someone, looking at West Melbourne now in 2025? Are there opportunities?
I'd say yes, definitely. It's a different kind of market, which creates different openings.
Like what?
Well, the obvious one is more negotiation power. That 96-97% sold to list ratio means you might get price cuts or maybe seller credits towards closing costs, things that were tough to get 2 years ago.
Right, more wiggle room.
And the longer days on market just gives you more time. Time to see properties, do inspections, arrange financing without that intense pressure.
Less chance of being rushed into a decision or getting caught in a bidding war.
Exactly. Fewer multiple offer situations, generally lower competition. Plus, West Melbourne has a decent amount of newer housing stock, built since the 2000s, which appeals to a lot of buyers.
Good quality homes available without necessarily fighting tooth and nail for them.
Potentially, yes. It's shifted from that frantic seller's advantage to a more balanced, maybe slightly buyer-leaning scenario right now.
So quite a transformation from just a couple of years ago. It really makes you think, doesn't it?
It does.
Considering these clear trends, the price resilience, the slower pace, the shift in negotiation power, what might the next few years hold for West Melbourne? And maybe more importantly for you, the listener, how can understanding this recent history help you play your cards right, whatever your plans might be?
That's the real question to ponder.
Definitely something to think about. Well, thanks for digging into these West Melbourne numbers with us today.
Glad to do it. Interesting stuff.
Well, that wraps up today's episode of RealiCare Reports, where real estate meets real life. For more updates, tools, and insights that will help you buy, rent, or invest with confidence, be sure to follow, subscribe, stay connected, stay informed, and stay ready. Until next time.